Yo guys, how's it going? So welcome back to another video, and in this video I'm going to be explaining how you would have managed to catch this PM session reversal on Friday, where price reversed from here and pushed all the way up to here. Obviously you can see now, obviously on the 1 hour time frame, price rejected and pushed back down, but that doesn't matter because you were able to at least catch a decent sized move on this retracement here. And I'm going to explain how you would have saw signs that you could exit this trade as well. So if you start off by looking at the 9 o'clock sort of time, AM session, you can see that we were looking and we were anticipating this box, this PD array, to hold as support. Why? Because at the time, if we just flip this back to a bullish PD, we can see that if I go and add the replay and then start new and bring it back there, we can see that at the time, before New York opened, New York session, we were already above the midpoint of this PD array, which is telling us that price is very bullish and it's already closed above the 50% level of this bearish PD array. So price should use this as support if price breaks out. But at this point in time, you can see here that price should use this and continue pushing up. If price closes back below this, then price will use this as resistance to push price back down. However, if we go to the next candle, you'll see that price closed back below. And at this point, you could say that, oh, okay, price could attack this low. However, there was no SMT at the highs here. There was no SMT or anything caused at the highs. If there's no SMT, we don't want to sort of trade the shorts because we know that on a higher time frame, this is not a swing point high. Price will likely come back up to take that out. So the draw on liquidity is not as clear, right? So we ended up stepping away from the AM session. You see is that price did trade back into it and then pushed back down. So obviously if you did want to sort of trade that point of interest, you could have. Bearish PD right there. And then price ended up pushing down. And this was the lunch hour, price pushed down towards here. And then we're getting to this point here where, okay, the PM session's about to open. So if we go and move the next 30-minute candle, you'll be able to see that there is a daily SMT with ES. This is telling us that ES has already taken out the prior daily low. However, NQ is just still above it at this point in time. So this can be an indication that price will likely want to flip from a sell program into a buy program. Why? Because the PDL has already been taken out by ES. If NQ stays above the prior daily low, then this scenario could occur, as long as price does not go back below this low. If NQ, however, continued to push down, it was just delayed, then yes, the sell program is invalid and price will likely to continue lower. So we'll stay out of it. So if I drop down into the 5-minute time frame, we can have a look, and we got the time cycle boxes up. And time cycles, again, if you haven't watched one of my videos, I think I released it before explaining them, essentially work pretty similar to prior daily highs and prior daily lows, but it's more fractal. They are essentially the prior 90-minute cycle low and prior 90-minute cycle highs that you can use, or the 30 minutes, which is this blue box that's inside it, or the 10 minutes, as you can see, they're the little ones inside it. So you can really fractalize time here and actually use each little sort of section or cycle as its own high and low, or as its own AMD. That's why they're sort of colored in blue, red and green, because blue is the accumulation, then we have the manipulation, then we have the distribution in certain occasions. So yeah, so AMD can really like work on a higher time frame. As you can see, we could have had an AMD per session. So that is your accumulation here. So let's make this a bullish PD just because it's blue. And then we have your manipulation, where price goes away from the desired direction. So let's make that red. And then you have your distribution, which is what occurred at 8:35, where price attacked the lows and took out the accumulation lows right there. So that's your AMD setup. But you can see this is based off like a session basis, like a higher time frame basis as well. So it does really work on like the lower time frames. So at the moment here, we're on a 5-minute time frame, and you can see that at this point in time, price has taken out the daily prior daily low on ES. Go down, drop down to the 1-minute time frame, what we'll be able to see, as you can see, at this point in time, price is taken at the low. Now, when it's 1:30, a new cycle opens, a new 90-minute cycle opens, right? Ranging from 1:30 all the way towards, I believe it's 3 o'clock. So that's the next 90-minute cycle. Yeah, 1 hour and 30 minutes. That's the next 90-minute cycle that will open. So price actually, sorry, I think I've said that wrong. What's happened is that this is a whole 30-minute cycle from 1 o'clock to 1:30. And then what will happen is at 2:30, that's when the next 90-minute cycle opens. So what has price done as soon as 1 o'clock opened? It pushed below the prior 90-minute cycle low, as you can see here. So we've taken out the low of the prior 90-minute cycle. What's still remaining at the top here? You could say that, okay, the 90-minute cycle high is still sitting here, 90-minute cycle high. So what we have, if we skip forward a few candles, what you'll be able to see is at 129, we ended up getting, I think there was another SMT here as well. Let me zoom out a second. Sorry, time frame. I don't know where the SMT detector's gone. But I need to really show you this. Okay, we've got the daily SMT there. There we go, that's what I was looking for. Right, if I can see this on the 1 minute time frame, it'll be even clearer. When the next 30-minute cycle opened, you can see the red box, price immediately attacked the prior 30-minute cycle as well. This created 30-minute SMT as well. So not only do we have daily SMT, which is from the other side on the high time frame, but we also have 30-minute SMT. So this is sort of extra confluence where we have double SMT. So now with this being the low, this is our low that we're anticipating that shouldn't be taken out. Okay, now in order for this to be confirmed as a reversal, what we need to see is we need to see either an inversion, i.e. if this gets inverted, you could enter off that. But for me, I like to see market structure shifts. So I like to look at where there was a original SIBI or a bearish fair value gap, which was holding price down. And once price trades back above this, this will then become a balanced price range and price should stay above that. So if you then see what occurs, you can see that price stays back below and then starts its push up. At this point in time, check the time. It is 1:45. This is right. 142 is when we can actually potentially take entries, whereas you would want to monitor 145 till 2:15. That is the macro window. So once price pushes up, you can see it's closed above it, retraces into this area, and this is where you would place your buy. So if I go and buy, say, 5 contracts, and then, is that 6, sorry, and then our stop loss would be below this level here, or you can have it below the main key low right there. So you can put it right there, because I'm not expecting price to attack these lows at this point anymore. And then what you'd do is you'd have your indicator there, stop loss there, and then where are you targeting? Well, you could target the prior highs here, these highs, and the main target could be the 90-minute cycle high. And then we'll just continue, just confirm that, and we'll continue the bar replay. And as you can see, price does continue, retraces back into it. But notice how price didn't need to come back into this area, because this is a balanced price range. We know that the price should not need to come back in towards this area. Price should just keep expanding, and then we can carry it on. We'll see where we go. So we have 30-minute SMT here. However, you can still see that the support and resistance areas are still being held. So this is another bullish PD. So as long as price sort of stays above this area, we expect price to continue climbing. And we tapped into that, and using it as support here. There we go. Yes, price did close back below it. However, we had this SMT that was created. So this is a good area to bring your stop loss back above towards entry, because I don't expect price to break below this low here. Price should stay above that. And then here at this point, we can see that we're getting that 90-minute SMT. Why? Because at this point, YM has already taken out the cycle high. So this is where we need to start being careful and start managing our trades. So we're going to bring our stop loss a little bit more aggressive at this point here. and then you can see that we start getting this expansion, and then we can still bring the SL higher, and we can take partials at this point because price is starting to take these highs here. This is another cycle high right there that you can drag across as buy side. And let's see what price does. Getting really close to that, and that is where we could have taken another partial at this point here, bringing the stop loss aggressively higher, right? Again, yes, I would be taking partials at this point. I wouldn't just be dragging my stop loss higher. But look, this is where we're targeting. However, we have an SMT with ES as well as YM. So what's happening is that you can see that it's a bit fuzzy, but that's because YM and ES both have taken this out. So now it's getting even more like you gotta sort of manage your trades, because price may not even get there because ES and YM already have taken it, and this could just be lagging behind. What happens after is that you can start seeing that price starts to pull back down, and then after, if I play a few more candles forward, look at that, prices come all the way back down. This does not mean that this model or this buy model failed. You could say that, look, the risk to reward on it was a 1 to 5, right? And let's say if you're taking your partials, it would have been a 1 to 4. That is still a great clean move to catch, but you have to manage your trades when, if there wants to turn around and you know that there's SMT, that time is going to turn around, then it's good to get out. And yes, it was towards the end of the day as well. You can see at 3:35, it's sort of in the last half an hour of the day, price ended up pulling back down until 4 o'clock for that close, for price to close. And one thing that you could see, right, is what do we have here? Accumulation, manipulation, and then we had distribution in the final half an hour of the day to finish this market maker model. This was a market maker sell model. Look where price started to slow down, took out this low. So this is what I'm trying to tell you. I would like you to go and in your charts start looking for this stuff, because this is what I'm trying to tell you, that the market is just moving like this, where it will create the sell side and then it will create the buy side. And then within a larger market maker model, you would potentially also have a smaller market maker sell model, which is occurring. So if you start identifying this, then you can potentially start exiting your trades at the right time when price is about to reverse, right? So if you can start identifying, whoa, okay, there's a potential market maker model here, time to start bringing my stop losses up, and we're also getting that SMC to confirm that price will reverse back down. Yep, time to sort of get out, take our profits and run away. So this is why I use these time cycles, because it really tells me that, okay, in this 30-minute cycle we accumulated. In this 30-minute cycle, what do? We manipulated towards the upside, right? Obviously this is an expansion on a buy model, but this could be a manipulation for price to drop back down. What is price doing in the final half an hour of the day? It's starting to disrespect bullish order blocks. As you can see, we break back below this. This has now become a breaker block. Price uses it as resistance and pushes back price down. This is not what you want to see if price is bullish. You do not want to see things break if price is bullish, and that is where your sign is to get out of the trade and be content. So I hope that sort of helped you understand on why there was a sort of market maker buy model towards the end of the day, and how you sort of could have got involved in this market maker buy model. Remember, it's time then price. So you notice how this expansion occurred within our timing, and then price continued up, and then guess where the next reversal occurred? When price went back down, in the final 45 to 15 of the market. If I put 45 to 15 here, this is the final macro where we have 345. Price expanded, retraced back in. This is where you could have got in for the sell, stop loss above the highs, and attacked the lows. But we weren't looking at the sells. We wanted to take that buy because of that daily SMT, with that prior daily low staying intact. And this is why on some pairs, the prior daily low doesn't get taken. However, on some assets, the prior daily low does get taken. That's your sort of thing to go and investigate, a little nugget right there in terms of what SMT does and why some markets don't have to take the highs, whereas some markets do. It's an indication that the market's likely to turn around if one doesn't. If they both do take out the prior daily low, then they're both in sync and price will likely to continue, and it's not a sign of a reversal. So I hope that sort of gives you an insight in how that trade was taken. And any questions, please drop them in the chat and I'll be sure to answer. It's been Oasis FX. Peace out.